Very good evening to all of you. On behalf of Committee for Members in Practice of Institute of Chartered Accountants of India, I welcome you all in today's very important VCM on Excel as well as Ind AS 110. Both the topics are very apt and very important one in these today's life. First one is the very important new tool of Excel, that is the Power Query. And in order to tackle this important Power Query, we are having with us our own chartered accountant from our own fraternity, CA Vijay Gervaji. Vijay Gervaji is a renowned chartered accountant as well as the expert in Excel. So on behalf of CMP of ICI, I extend my heartiest welcome to Vijay Gervaji. Welcome to you, Vijay Gervaji. Welcome.
Dhanyavad.
And the very important topic in these time when books of accounts are going to close, that is the consolidation of financial statements. And as per the Ind AS 110 consolidated financial statements, we are having with us our own chartered accountant, TA Amit Gargji. So on behalf of CMP of ICI, I also welcome you, Amit Gargji. Welcome to you. Now, it is my proud privilege to share with all of you the brief profile of both these speakers. Let me introduce CA Vijay Gervaji. Vijay Gervaji is a big data analyst and automation expert, and he's a chartered accountant and company secretary with more than 27 years of vast experience. Currently, he's a freelancer providing MS Excel solutions and training to the corporates, institutes, and automating processes by using Excel and BI tools. He also do PowerPoint training, and he's the Microsoft awarded Most Valuable Professional award for 4 years consecutively from 2014 to 2018, and less than 100 MVPs in the world. It is a very big achievement, sir. Previously, he has worked with Telenor, Capgemini, Aircel, Hughes Software, Jindals, as well as Havels. He is a faculty of Institute of Chartered Accountants of India, leading to the Forensic Audit and Fraud Detection FADP program. He is having his own website and YouTube channel with the brand name Champ Excel. He has attended and he has given so many webinars, virtual CP meetings, and during COVID 2019 lockdown days, he did his lots of webinars for ICI, ICSI, ICWI, for NIRC, SIRC, various study circles of ICI, Dubai chapter, ICI COFAT, other federations, where more than 1,000 chartered accountants as well as company secretaries were present, and he has shared his vast experience and vast knowledge to more than 1,000 chartered accountants and other professionals. He had 3 webinars for Institute of Chartered Accountants of India in 2016, each one attended by more than 2,000 chartered accountants. He for the corporate groups, more than 200 workshops he has given. For the ICI Faridabad, he has deliberated for more than 25 seminars, and ICI North India branches like Gurgaon, Amritsar, Ludhiana, Jalandhar, Shimla, Karnal, Hisar. I hope there is no branch left in Punjab and Haryana where he has not visited or not deliberated for our esteemed members. And if we talk about his clients, PwC, HMEL, GAIL, DLF, Ernst & Young, Sapient, Chopper Software, EXL, Pearl DMC, VICM, Bacardi, Civic, Times Group, Tata Communication, Hughes Software, Starlight. So many clients are in his list. Still, my list is very long. His profile is so long, it will take another 5 to 10 minutes. So hats off to you, sir. So on behalf of CMP of ICI, I extend my heartiest welcome once again. Welcome to you, sir.
Thank you, sir.
It is my I will take liberty, and it is my privilege to share the brief profile of Amit Gargji also. He's also a chartered accountant and partner in RNPP and Company. He leads audit and assurance practice in his firm. Amitji has more than 16 years of professional experience in assurance and advisory services, and is known for his technical expertise combined with a business acumen and pragmatic approach. Amit has worked with SR Botley and Company LLP, member firm of Ernst & Young, for more than a decade, where he has part of the audit and assurance division. Amit has vast experience of serving large multinational clients. He has extensive experience in IFRS, Ind AS, IGAP, special audits, IFRS transition, ICFR, SOX, texting, business process re-engineering, tax audits, capital market transactions, and due diligence. Amitji was also involved in the diagnostic assessment and implementation of IFRS Ind AS for large multinational corporations and domestic companies, and have been advising and supporting them on a continuous basis on matters concerning to IFRS and Ind AS. In addition to this, Amit is a technical reviewer with the FRRB of Institute of Chartered Accountants of India. He is also the faculty for IFRS and Ind AS course conducted by Institute of Chartered Accountants of India, as well as the certain courses conducted by Delhi University. He is a member of group constituted for quality enhancement of study materials of subject financial reporting at CA Inter and final level. And he is the corporate trainer on Ind AS and IFRS. So still his list is also very vast. So welcome you, Amitji, for sparing your valuable time, and heartiest thanks to both the today's faculties for giving us this opportunity on a very short notice to share your expertise, to share your knowledge with all our members throughout India. And more than how many members, Rishabh have already 1200 members have logged in till at this particular afternoon at 3:35. So once again, welcome to both the speakers. So coming to this, our first technical session, that is on the Power Query, the new tool of Excel. So we have with us Vijay Gervaji. So without wasting much more time, Vijay ji, over to you.
Thank you very much, Anilji, for such a enthusiastic my profile. So all the things, all the details. So really, I am very proud of the member of ICI and whatever knowledge I am having about Excel. So it's always feel very glad on this platform. So friends, today
Vijay, I would like to interrupt you. Vijay ji, I would like to interrupt you. This is 98th program of CMP of this year.
Oh, great. Very good.
This is 98th CP program of CMP of ICI this time. Tomorrow we will be having 99th and day after tomorrow 100th CP program of CMP of ICI.
Congrats in advance.
Congratulations.
Thank you, sir.
Very good. So I'm very thankful to the committee of members in practice, and really once again inviting me on this platform. So friends, today my topic, that is the Power Query. And like by listening this Power Query, like generally people feel that, okay, this is something like new software or something like extra, something like which is not like common things. But friends, this is like very much part of standard Excel. So if you are having Excel 2016, or if you are having Excel 2019, or the latest Excel, which I always recommend, if you are having Microsoft 365, then this Power Query is very much part of that your part. Like you are having VLOOKUP, like you are having pivot table. So in the same way, this Power Query is part of your Excel. So you don't have to, you don't need to do anything else. Just like if you are having Excel, that's enough. If you are having these versions. So friends, this Power Query is a very big ocean and very powerful tool. I am using Excel for last 22 years. And I have never seen such a great tool in Excel other than Power Query. So this is so much like I'm also learning. So recently I have a session only on Power Query for 10 days, 25-hour sessions like I had only on this Power Query. So today, just like I would like to give some overview of Power Query, some like things which we can do with this powerful tool. So once you are going to know that, okay, these are the things which are possible, so definitely you are going to have the interest and you are going to explore more about this Power Query. And definitely by using this Power Query, you can save your days, hours, and convert it into minutes and seconds. So that's the power of this Power Query. So let me share my screen, and practically I would like to show you that, okay, how this is going to change our working style and how like it is going to maintain our work-life balance. So that we are going to do now. So let me share my screen first, friends. Yes. Anilji, are you able to see my screen?
Yes, sir. Yes, sir. It is visible, sir.
Very
Make
good.
it full screen, sir.
Thank you. So friends, this is my working file which on which I am going to work here, and already Anilji told you that I am having my website also and also the YouTube channel also. So in case like even like in this short span of time, like if we are not able to cover all the things, so anytime like you can speak to me or you can mail me for your any of your queries. So these are my phone numbers and queries that also you can find anytime. So friends, what is my agenda today? So about Power Query, because most of you are new about this like new tool. This is Power Query. So today, first I would like to tell you about something about the Power Query. So little mind tree, like how, like what type of like branches are there, how it is work, what is the interface, all those things, friends. I would like to tell you in very maybe within 5 minutes, and then we are going to have some real time example. So those are like in day to day life we are having. So all those things, like how with the help of Power Queries, earlier those things were not possible in standard Excel, but by using of Power Query, those things like transformation of data we can do within seconds, within minutes. So those things practically we are going to see, friends. So first thing, mind tree, like about Power Query and what is the interface, what is the user interface about this. So in case like Power Query, so first thing, friends, here about Power Query, like what's it? So here, like I would like to say this is ETL. So if some of you, like I'm not sure, whether Anilji, like participants can write on the chat box right now. So if like they would like to answer some of my questions.
Sir, no, it won't be possible. They will write the questions to us. Then I will ask the questions at the end, sir.
Okay, no problem. So in case this is Power Query is a ETL. So what denotes ETL? So ETL so these are the three characters. So the full form of ETL is like extract. Like first we are going to extract the data. So that is the first thing. Second thing, transformation. So by Power Query we are going to transform our data and then load. So this is the technique, like in this tool, like nowadays these ETL tools are very popular, and for big data those are very important too. So here this Power Query is a ETL tool. From this we can extract, transform and load the data. So these three things we are going to do. And after extracting, so it's not that our data, so it's always not a good data. So in data we have to transform a lot of things to make it workable, to do the analysis. So for doing those analysis we need the data cleansing. So those data cleansing is possible in the user interface. So in Power Query in Excel, when we are going to do some transformation, when we are going to extract the data in transformation, so there one user interface will start. And in this user interface, like a screen, there is a separate screen will be there, and that looks like Excel. So in that screen, friends, we can transform our data, right? So we can connect our data. This is also a connector. So maybe we are having data in like multiple forms. That can be CSV file, that can be PDF file, that can be your web, some document from web also, that can be your server. You can get the data through ODBC from Tally also. There may be multiple files, there may be folder. So you can also merge all the files, and maybe you can connect all these like different files or different like areas, sources. So those also you can connect with the help of Power Query. So Consolidator is there. We can merge as well as append. Merge is like a VLOOKUP. Like we are having two tables and we want to get some data from a second table. So that is a merging. So it's called in this Power Query in this language, it is a merging of the data. And one is append, like we are having in a folder and we are getting budgets from the different locations. We are getting the trial balance from different locations, and we want to append the data like one by one. First, below that, second, third, fourth, fifth. So this is called appending the data. So that's also possible. And this Power Query work in not only in Excel, but nowadays Power BI, business intelligence. So where we are showing our data in a graphic way, in a very effective way. So that is also possible with the help of Power Query. So Power BI is nothing. 70% that is also Power Query. So if you know the Power Query, so that will help in Excel as well as Power BI also. And this Power Query, like we can data generator, we can have the calendar tables, we can have list for automations. So all those things we can have, friends. And what are the data sources? So little bit I told you, but here also you can see like the same file it can be there. So there can be table or range. It can be other Excel files. It can be text file. It can be JSON. It can be web. It can be databases. So SAP or Oracle, Tally. So all those things can be there. Cloud sources. So there may be some cloud sources also. PDF files also can be there. APIs. So those things like we can connect our Excel to all these platforms, right? And from there we can extract the data and transform the data. So we are going to create some die. Once we are going to create this die, that die is going to work for us. So once you have created this, next time if your data is going to change, if you are having the more files, so automatically just click of a button, that die will work and immediately you are going to get your latest data, latest reports within minutes, within seconds. So that's the powerful thing about the Power Query. And what is the interface here? So like in interface, like in Excel, we are having home tab, insert tab, draft, page layout, formula. So like that, in this user interface also we are having different tabs. So practically I will show you, there is one is home tab, one is transform tab, where we are going to play with the data. So we are going to do the cleansing of the data. So those things are possible with the transform the tab. And then we are having also one the add column. So we can also add the columns, we can delete the columns, we can copy, or like even in the columns, like some data we are having. So we can connect maybe 2 columns, 3 columns, we can merge, or maybe we can split the columns, or maybe we can give some like if type of conditions. So those type of things also we can do. So all those things are possible with the help of like ribbon. So today, like I was told that, okay, in this session, I'm going to give you just a overview. So like curiosity, I want to create some curiosity with about the Power Query. And then maybe in a later stage, or maybe next month, or maybe after that, so we are going to have more sessions about Power Query in more like detailed manner, and more deep dive we are going to do. So here, like I hope a little bit about Power Query you have understood. But definitely once we are going to see the practical examples, then it will make a little more sense. So the second example, so now let's move to the practical example, and that is the like how to split rows, split into rows, like split into columns, that we have heard, but we never heard that we can also split our data or our columns into rows. So that is something new, and that is only possible in through Power Query. So in standard Excel, like you can't do, there is no way you can do. So let's see, I'm going to show you one example. So let's understand with the example, and then it will make sense. So this is the data, friends. Okay. So here in this data, friends, I am having customer ID. So right now I am having very small data, but in practically, and one more thing about like Power Query, friends, here in Power Query, friends, there is no limit of the number of rows. There is no limit of the size of the file. So even you can like play, you can extract the data which are in the millions of rows. So there may be 5 million rows, there may be 10 million rows, right? The file size can be 1 GB, right? What text file that can be of 1 GB also. And there may be multiple files, maybe 500 files you are lying in a folder, and you can extract without opening the file. And if you want to merge all the files, or if you want to extract some data from those files, so that is also possible. That's the things actually we can do. Maybe in later on we will show you. So today this example I am showing you that, okay, only very few rows, just for training purpose, just for the overview. So here we are having different customers, and this data, friends, we are getting from our some software. That is some external software we are having, like we are having Tally, sometimes like different, like nowadays there are so many apps, there are so many softwares are there where we are working. So from that software, I am getting data like this, that okay, for this particular customer, friends, I am having my invoice number 721, and for that invoice value is 9,219, and this invoice is for January. Then I am having invoice number 649, and this is the different amount, and this is the March. And what is the separator? The separator is space. And in this like one detail, I am having three inputs. So three inputs is, one is invoice number, second is invoice amount, and third is the month of the invoice, right? And one customer ID, friends, sometimes I am having like maybe 4 invoices, sometimes maybe I am having 5 invoices, or maybe for one customer I am having 500 invoices, and those are only on single cell, and that is like there. So now if I want to have some report, if I want to do some analysis, so if you are having data like this, so this is useless for us. Nothing we can do. If I want to know what is the total sale, that is not possible. I want to see what is the sale in January, that is also not possible. If I want to know, okay, which customer is giving me maximum revenue, top 5 customers, that also not possible. If I want to see the trending of the sale, that is also not possible. So like that, there are so many things, like how many invoices we have generated in the month of January, that is also not possible. So all those things will be possible only and only when we are going to like this, change this data into a proper tabular form. And that data, like if we see, so first my data should be customer ID, and the second column, if you ask me, so how we can have, so if we are going to split this data into customer ID, the second column should be invoice number, third column should be invoice amount, and fourth column should be date of your month of sale. If or it can be date or it can be month. So there may be multiple invoices like for a same month. So if I am going to have these 4 type of details, the number of rows can be multiples, because right now in one row we are having so many like invoices, 1, 2, 3, 4. So there may be for these 4 invoices, 4 rows. So like that, number of rows can be multiples. So if I want to convert this data into this, how that is possible? So one thing comes to our mind, that okay, in our earlier version, earlier Excel, there was a text to column. So that was possible. Yes, you are right. So in text to column we can do, but still when we are going to use that text to column, friends, let's see, Control C, and if I am going to have this data as a, and if I want to do the text to column, what will happen, friends? Data, and if I want to see text to column, and if I say okay, like delimited, and then if I say space, so what will happen? So here, like it is going to split data. For some there may be 2 columns, for few maybe 5 columns or 6 columns. Then again I have to split, but still it will go into different columns, right? But if I want, which I showed you, so it is not going to show me in that particular manner. So how to do that? So let's understand about that. So this is my data. So now I should keep my cursor on anywhere and go to data. Where is my Power Query? So because there is not a different tab. So friends, this Power Query is available in Data tab. So we are having this Data tab. In this Data tab, this is the portion of the Power Query, and this is saying get and transform data. That means, like I was saying like extract and transformation, ETL. Okay, so this is the get and transform data. So right now it is asking, where is your data? Is it text file? No. It is from web? No. Is it from the same sheet, same file? Yes. Or there may be other like sources also, from file, from JSON, from PDF, from folder, from databases, SQL Server, analysis services, SQL Server, this Access database, and here you see web, here QData feed, ODBC. So there are so many databases which we are having from where we can get the data. So here let's understand. I am going to have the cursor here, and after that from within sheet. When I am going to click this, now it will take me to the user interface. So this is the interface. It looks like Excel only. You see here also like it looks like Excel. So I found there are two columns of my data. Those data is available here. I can increase or decrease the length of the column also, right? Or also like if I want to have this column like here or there, so that type of thing also I can do. But in this data itself, I can't change. I just can use only the transform, this tab, to split the data or doing the further things. So here customer ID is okay, that is fine. So now I am having the invoice details. So like earlier we were having text to columns, friends. So here how to do it? So friends, what I can do here, I select this column and go to transform. And here I say I want to split columns. Okay, so now it is asking how you want to split the columns. What is your delimiter? By delimiter, by number of characters, by position, lowercase to uppercase. You see, lowercase to uppercase, that is possible here. Uppercase to lowercase, and by digit to non-digit or non-digit to digit, that is also possible here. So right now I want to have my delimiter, that is I am saying my delimiter is delimiter. So here I say my delimiter is space. So that is the okay. So this is my space. Now it is asking me that okay, this is your delimiter. So whether you want to split only the leftmost delimiter or you want to extract all the delimiters, right friends? So here like it is saying that I am saying that each occurrence of the database. So here there is a advanced options also, friends, advanced options, and in this advanced options I am having columns as well as rows. So I am saying I want to split this data into rows, not in the columns. Are you getting my connection, Anilji? हेलो
विजय जी ऑल टैप करके देखना, आई थिंक स्क्रीन चेंज हो गई है, ऑल टैप करके देखिए जो आपकी पुरानी स्क्रीन।
ओके ओके
यस यस
ओके यस गुड. So I am saying like split column by delimiter. So here like I was saying friends that space, and here like one thing is split into columns, but here I am saying I want to split but I want to convert into rows. So I selected the rows and after that I said that okay. So you will see here it will not go into right side but it will go into downside, and my customer ID will also get repeat. So once I do it and I said that okay, what happened? My customer ID and my invoice details. You see my data split is there but not in columns but into rows, right? So one new things you got about this Power Query, that these type of things are possible. Now again if I want to split, because I want to have 4 columns, so now I want to split that. Okay, I want to split based on the semicolon, based on the dash, that is also like possible. Again I am going to select here, and friends whatever I am doing, what Excel is doing, so he is like doing the coding of all these things. I don't have to worry about this coding. This was my source data. These are the steps, different steps are there. So this was my source data. So it is the coding Excel.current workbook. So this is the name of the table and content. In second step, so it has like changed the formatting of the data. Okay, then split columns by delimiter. So it has splitted the columns into rows. So second thing, automatically sometimes it like see the data type, and if that is a number, so it converts into numbers. If that is a text, it converts into text. Maybe later on also we can do this like thing. So any steps we can delete also. That's on us. So now again I want to split the data. So here friends, again I'm having this split column. Again I'm saying delimiter, and this is very intelligent. So automatically it is saying whether you want to split based on the dash If you say yes, each occurrence of the delimiter, advance option by default is column. Yes, this time I want in columns. I said each occurrence of the delimiter. Okay. So now one is invoice, one is the invoice number and amount, and then January. But here, because I am having the semicolon also, so this column also, again I can split the column and I say by delimiter, and this time automatically it is saying semicolon. I said okay. So friends, you see, here is the invoice amount, here is the invoice here is the invoice number, invoice amount, and here is the month of the invoice. I can change the name of columns also. So here I am saying invoice number. Here I am saying rename. So those rename also we can do. So I am saying invoice amount. Here friends, I can say that okay, this is my month or date. So this is my month. And if I don't want this column, because everywhere it is invoice, I can also put the filter also. So here, like I don't need, so right click and say remove. So now I am having customer ID, invoice number, invoice amount, and the month. So 4 columns I got here. And after that, so first thing was extract. I extracted the data from the same Excel file. Now whatever I have did, so that was the transformation. Now the third thing, ETL. Third thing is L. L means I want to load the data. So where I want to load the data, whether I want to park this data in a separate place, or whether I want to load it into Excel, or whether I want to make a pivot table of this, whether I want to make a pivot chart of this, all those things are possible. So if I go here and if I say close and load, so there is a close and load too. So here it is asking where you want to load your data. So if I say table, if I say pivot table, if I say pivot chart, only create connection, or existing worksheet or new worksheet. So I can say I want to load the data into existing worksheet and where I want to load on the this cell. And after that I said okay. So once I loaded the data, it is saying 48 rows loaded. And let's see how it looks like. So you see here is the customer ID, invoice number, invoice amount, and the month. All the 4 columns we got. And what is the beauty of this? So now the next thing which you are going to see, that is the real power of this Power Query, friends. So what is that thing? Let's understand. This die has been made. Friends, हमने die बना ली है यहाँ पर. Now what I want to, if my data is going to change, if some amount is going to change, if I say that okay, this my customer is ICAI, this my customer is Amit, this my customer is Vijay, right? Or if like I want to have some more customer also, I say that okay, here Anil, some new ID is there. And if I say that okay, here let's copy same thing. And here I say that okay, I am not having this last data, right? And also like if I am going to change the amount, so just for the 4 times 9, I have put this. So these data I have changed, or I can also remove some data. Suppose I want to remove the first data, that is the 256500. So I want to remove this data. So I can delete this row, right click, delete, and table rows. So I want to delete this row. So this row I have deleted. Now what I have to do, like the pivot table, friends, you know, like the pivot table. Right now there is no Anil, there is no ICI, because but in our data those things are there. Only thing I have to do, anywhere on this table, right click and refresh. And once you are going to do the refresh, automatically your the data is going to change. Latest data you are going to have. So that is the Amit is there, Anil is there, Aisha is there, Vijay is there, and the line which we have deleted, that also gone away from there. So this was the very, very basic example, very simple example which I gave to you, that I wanted to show the power of Power Query. And if you ask me, this is just 0.0001% of the Power Query. So when we are going to have like more examples, more power, and this is very small data, when you are having this data in millions of rows, nowadays, like we are getting some data like from Amazon, right? We are getting from Make My Trip. We are getting some data from different like softwares. And from those softwares, like real time basis, we are getting the data every day, every week, and we want to analyze the report. We want to change our strategy that, okay, which product is going well. So those type of things are possible. We can connect our Excel to their sources, to their like server, or maybe we can extract the data, and then we can have such type of reports, and then further we can analyze, we can do the dashboard. All those things are possible here, friends. So this like I took little more time, so just because I wanted to show you. And the second next example is transform text items. So how to do that? So here in the same way, like we are having sales / sales assistant. One is department, one is position. So I want to split these things. I am having unique code, but here in delimiter, there is no space, no comma, no semicolon, nothing is there, but only numbers are there, and these numbers are my employee code. I want that, okay, in this employee code is E70, here E123, here E345. So I want to have all these employee codes. I want to extract, and here is the full name. I want to extract only the first name, not the full name. Only I want to have the Vineet, Amit, Rajanna, Mayank, only those names I want to have. The other like names I don't want to have. So again, this is also possible within minutes. Now put cursor anywhere, go to data, click on the from within sheet. Now this is user interface. Once you are on this user interface, you want to split this, you select this data, okay, and you say that, okay, transform, split column by delimiter, and this column will be splitted in the class. So this is my department, this is my position. I can rename also, maybe later on we can rename. Here is the unique code. I want to extract only numbers. What I can do, again select this data, and here I am saying that, okay, split column by digit to non-digit or by non-digit to digit. So first I'll say by non-digit to digit. So now this is now again I want to split. Again I say split column by digit to non-digit. So you see, I got my all the digits here. So these columns I don't want. I can delete these columns. So I am saying remove columns. And here I want to put E also. That every these codes I want to put some prefix also. So once I am going to have this, go to format, there is a add prefix. I am saying what I want to add, E dash. Okay, so my E dash is also there. So here my full name, I want to extract only the first name. Again go to the split columns by delimiter, and this time I say that extract by space, but split at leftmost delimiter, only the leftmost delimiter. I said okay. All the first names are there. So this columns I don't want. So I say remove. So this is my, I can change the rename, anything like we. So I say, so this is first name. Here my employee code. So those things you can do anytime, I believe. So here is the employee code, and here you can change the position, and here is the department. So once you have done it, your die is ready. Again, you can play with your die. Any number of data you are having, you can play on this. So these are the 4 columns I am having. If further you want to do that also, and all the steps are there, and whatever the coding for these steps, like this was the first step, second step, third, fourth, any step you can delete also, you can insert step in between also, all those things you can play. And still, like if you want to, these are called query. The query name, this is. If you want to copy this query, right click and you can say duplicate. So those are also possible. Now in this query, if you want to do something more, if you want to extract right name, like last name, that is also possible. So like you can do the duplication also. And if you want to delete some query, so you can delete also. So this query I have deleted. So I am having this thing. Now again I go here home and I say close and load. If I say that okay, where you want to load, close and load. So by default, if I don't say anything, so it will create a new sheet and there it is going to upload this data. So this is department, position and employee code and first name, everything is there. Where was my original data? This was my original data. If I'm going to change this data, like if I say that okay, here in my data only there are 5 rows. Here in Amit Goyal, the name of code is not 123. It is 1, 2, 3, 4, 5, 6, 7, 8. Okay. And here I say that okay, not Amit Goyal name. Name is Amit Kumar Goyal. Right. So it is going to extract only Amit. Right. Here I say that okay, here only, like if I say only single name is there, only Kumar is there. So that also I have changed. Right. So I have done the different changes. And if I want to add some name, so that is also possible. Like if I say that okay, the same name I am going to add here. So I have added a new name and here like let's say I am saying that is 98765. So I have given this code. Right. Now let's see. Go to our table. This is our die. In this die, what I have to do? Right click, and after right click, do the refresh. Once you have done the refresh, you see this is my employee code. Amit is there because I have done the copy. So this is also same, but here the employee code is different. Here you see Kumar, my Kumar, because I have given only the Kumar name. Everything is ready. My die is ready. Now I can make any reports, and this data can be any number of rows. Right now I am showing this data from the same Excel file, but in practically these Excel files, instead of Excel file, this can be text file, this can be your server, this can be your from website, anywhere you can connect your Excel. And once you have connected, you can load the data, you can extract the data and play, transform, and everything is ready. So 2 examples I have shown you. Now let's see third examples. Remove duplicates. That is also possible. So here everything is possible here in this transformation, in this user interface. So again, let's go to their data. I want to remove duplicates. I want to have department and position. How many department and position I am having in my company? Because here different employees, there are few employees which are on the same department, on same position. So I want to extract how many department and positions are there in my company. So I am having very like big data of 46 like rows. Now data, again go to from within sheet. It will go to the user interface, right? So here I am having 4 columns. I don't want 4 columns. I am going to delete these 2 columns. Yes, I have deleted. This was my first step. This was my second step. And after that, I want to remove duplicates. Selected both the columns and I said that, okay, what I want to remove here, remove rows. So here is saying remove duplicates. I said, yes, remove duplicates. It has removed the duplicates. So now my report is ready. My die is ready. Again, I go home, close and load, and everything is ready. So this is my department and position are ready. If some new position are there, if I say that, okay, there is some new position. Instead of sales assistant, there is a new position here. And that, let's say, I say that is the department of ICI. And here, what is the position? So let's say new position of ICI. And not only single place, I am going to put it on the second place also. Control B. Right. Now go to our die. Let's see whether our die is going to work or not. So this was our data, right, friends? And let's see, right click, refresh. Wow, excellent. Within second, everything is there. ICI, new position of ICI. that is there, remove duplicates is there. So data volume is not a problem with the Power Query. तो आपने क्या करना है सर, लाइक यू वांट संजीवनी बुट्टी. तो हनुमान जी वाज सो पावरफुल, so because he was powerful he put like पूरा पहाड़, like he came with that like mountain, right? But we need only sanjeevani butti. So what we can do, so just use the Power Query, all the transformation you did in the back end, and just malai आपको लेके आनी है. वो malai as per your need you just bring that into the Excel. इससे आपका your file size also going to reduce, right? And right now I am showing only the single like source, but later on maybe in our next like session we are also like can see that okay, how 2 files 3 files we can connect, how like VLOOKUP can work in Power Query, and that's also in a very like very speedy manner with the lakhs of rows. Because in lakhs of rows if you are going to use that type of XLOOKUPs or VLOOKUPs, so my file is going to hang or sometimes not responding, my Excel doesn't work. But those type of problems are not there in Excel, like if you are going to use the Power Query. So next example, so let's see what is my next examples, friends. So if I am having ERP data, so like my SAP I am having, and from SAP, friends, let's see, I am having my data, and that is like this. You see, oh, such type of data, what type of report we can make? No way. It is going to take huge time for us, and every time so much time, precious time, that actually my like staff, so my colleagues, so they are spending just to clean this data. And is this a value addition? Being a chartered accountant, we are like on such a great position. So our main work is analysis of the data. So this ये झाड़ू पोछे वाला काम, like so this like आप एक्सेल को आउटसोर्स कीजिए, एक्सेल को करने दीजिए, like Excel will do it very nicely, right friends? So here what you can do, friends, here let's see how like it is going to work here. So you go here on this data, so you say that okay, this is your data, and you selected the data, and after that all the data, even there may be like blank rows, blank columns, that can also be possible. Even those things will Excel will take care. Only one time you have to spend for making the die. So once you have selected the data, again go to data and you say yes, from the same file within sheet. So you say my table doesn't have headers because there is no header. Yes, you say okay. Once you say okay, my data will go. Original data will be intact. That data is not going to change. So from that data, I have taken this, and this data is now automatically it has given the some headers, column 1, 2, 3, 4, 5, 6. But my headers are in row number 11, right? 11 number rows, I am having my headers. So what to do now? And there are so many rows which are kachra. So those rows I don't want. I want only rows which are having amount, and even the amount which is more than 0. Even 0 lines I don't have, right? So how to do that? So what I can do, friends, here, so you go to any column which you feel where you want. So only those things let's select, and you say that okay, you are having in your data, and this is the document number, right? So these are the column 4. So here you say select the column and you say I don't want the null. Null means blanks. Okay, so you have filtered it out and everything has gone. So here is the vendor and here is the different like again, like because these are the like in a print type of document. So every time your headers are going to repeat. So no worry. So once like you are having this data, so now these headers are there. So you want these headers should be your actual headers. So there is a very good command here. Go to transform and here you can say in home button itself, use first row as headers. That I want my first row should be my header. So just click on this and my first row is now headers. So I am having this vendor column 5. So where I am having header, so I should keep only those rows. Vendor is there, and if some other rows are there, data is there. Those by selecting the like this PVK document number column 11, this I don't need. And let's see after that amount in document currency, and after that like these columns maybe I want. So let's keep all these columns, and after that, and here also I don't want column 1, column 2. Right click and remove columns. Wow, little better than earlier. And even like if still if you feel that okay, this column is not of my importance, so still you can also remove such type of columns. Now you see this is my vendor code, this is my reference, document number, type, profit center, all those things are there which are of relevant, right? You see that okay, DD here also most of the null, I don't want, remove this. Amount in local currency, I want only an amount in local currency, not so it depends on your you. And after that, if you go here, so there was a document number. So here if you go here, so you'll see that okay, here my data is there, and in this data document number is also there. I don't want document number. Again, filter it out. Now it's little more my data is there. Now my document date. So these dates are in a like format of ABC. That means it is a text. I want to convert it into a proper date format. Again, I am going to select this data and I say that okay, when I am going to click this ABC, it is asking what you want to convert. Yes, date. My date has been converted into a proper date format. Here my amount in like document currency. So it is saying ABC123. I say that okay, it is my decimal number. So like that, anything you want, and or if you want Excel should do automatically, that is also possible, such type of things, right? And even if you want to create some more column, so like in from your date you want to convert year also, so go to add column. Here in add column you say I want from this column only year. So one more column is there, that is for year. My original column is there and this is my new column of the year. If I want from this column what is the day of this year, date, so I can say that okay, day, name of day, right? I say what is my name of day. So such type of things are possible. It is saying Thursday, Friday, Sunday. If I want to extract, see only Sunday, I want to analyze the data only on Sunday date, how my sales are going there, because that is a holiday. Most of the people are going to the mall, and this is the data of his some mall. So I want to see the trending of my Sunday sale, or I want to compare Saturday versus Sunday. So those type of things are possible. Here we can also put the conditions like if Saturday is there, it should be set. If Sunday is there, Sun or other, so we can put other also. All those things are possible, friends. So now we are having this data. Go to home, close and load. You see my earlier data and you see my new data. You see my earlier one and this is my new data. And now you can make any report from this data. And this is your die. If you are going to have the extract new data, whether earlier your data was the 100 lines, in new data you are having maybe 10 lakhs lines. Just go here, right click, refresh, everything will be there. That's the beauty of Power Query. So all those things are possible, and while taking the time constraint also, let me give you one more example, and that is unpivot multiple columns. So that's very, very great power of Power Query. Here friends, like sometimes I am having data like this. I am having country here, and in country also there are blank rows. Blank rows means here also it denotes for the US. This is for UK. Here my product codes are there. I am having different dates, but in this way. But from this type of data, I can't create any report. You tell me, if you want to make some pivot table, is it possible? Can you make pivot table from this data? can you, if I want to ask you, I want a report for only for January. So in pivot table, you will have so many columns. But what is the proper way of this data? If this data is going to convert like this, country, product, month, and or instead of month, let's say date, or here sale value. If I am having 4 columns, rows may be multiples. So this is my proper data. This is the like the database should be like this. Then I can make any number of reports, any type of report I can create, friends. So this is the thing actually I want to convert here. How to do? Again, select any row, go to data, go to from within sheet. It will take to the my manufacturing plant. So this is my manufacturing plant. Okay. So this is my processing of like die I want to make. So this is my manufacturing unit. So here different columns are there. So I want to repeat all the columns. No worry. Select this and go here and you say that okay, what you want to do, transform, and there is a command fill. What you want to fill? Down. Whatever having upper side, that should be down. Wow. That is done. My product is there. Now I want to change these dates into like in this. So that is called in a unpivot the data. These 2 columns I don't want to change. Those should be part of that. But except these 2 columns, all these columns, these headers should be part of a single column. And this amount should be corresponding to that. So just I selected these 2 columns and I said that unpivot other columns. So I said that unpivot other columns except these 2 unpivot. One is pivot, this is unpivot. And once I have done, wow, one is country, product, value, attribute. I can change the name and I say that my this data and the rename is date. But this date is in a ABC format. Again, click it, date. Wow, this is converted into date. This is into value, country, product, date and value. Everything is done. Go to home button, close and load to, or close and load on new sheet. And this is converted into my proper data, country, product, date, value. Now I can make pivot table. I can do the filtering here because it is in a single column. Automatically it is showing me January, February, March. I can extract the quarterly sale, weekly sale, anything I can do because this is in a proper format. This was my original data. And the beauty, now you understand, now you know what is the beauty. If I'm going to change any data, if I'm going to increase the columns, even like if I'm going to don't have the rows, like in case Germany and in coffee, I am having only 2 rows or 3 rows. One this, 1, 2, 3. And if I want to see that, okay, Germany, coffee, and this like, and let's say I am having one country, India also. And here I say ICI, right? And I say that, okay, 10 and 20, only 2, rest are there. And if I go here, go to my this, what should I do? Right click and refresh. Immediately you are going to get India, but here only 2 rows because there is 10 and 20. If those were blank, those were not there. Right? In case of coffee, I am having only 3 rows. But in case of shoes, I am having multiple rows because I am having more data. And in future, you can also say that I want only rows which are more than 100 value. I don't want in passage, like if there is a 50 paise, 20 paise, you can put a filter there. Like when you go to query and you say that, okay, in this query, I don't want any value which is less than 100 or 200. So here you can say, okay, number filters greater than, and you say I want greater than 500 only. Okay. And again, home and close and load. Now your all values will be greater than 500 only. Even if your data is going to change, if suppose like you are having this data all the data. And if I am saying all my data is 200 rupees, but if I say that, okay, only 500 rupees is shoes for US and for like not 500, 501. And here I say that, okay, India, ICI, that is 1000. So there are only two rows. One is 501, one is 1000. And I because my die is going to work like that. If I came here, right click and I say refresh, wow, US shows, and here only 501 and 1000. So I can have only this data, and this data which like I am having. So you see, like sometimes my files are very, very heavy. So those all heavy things have gone. So I can get only the Malai, only the Sanjeevani Bhutti I can get from here. And even like friends, you can get from here like the data which is from web, like exchange rates. So here you say that, okay, this is the website and my exchange rate should like change automatically. Maybe your mutual funds are there, your like share prices are there. So if you want to extract the mutual fund, so those things are possible. Real time holding, like I am saying that, okay, these are my different mutual fund. Every day they are having the different rates. Just if I am going to right click, refresh, and my holding is this. There are mutual funds, there may be 20,000 or 15,000 mutual funds are there. And my holding is only on 20 mutual funds. I want to see what is the net worth of my mutual fund as on date. Now, just I have to do data and do the refresh. Automatically, I am going to get the latest value, latest NAV, and this is going to give me the latest report. So these are the like beauty. Just I have to, because already I have made a query, because of time constraint, I am not showing you how to do that. Just I have to press refresh all. So once I am going to refresh, automatically I am going to get the you see date of 8th Feb, and my holding is going to change automatically depending on the whatever my data is there. So that was all from my side, friends, today. And if you have any questions, so you are most welcome. So you can write on the Q&A box. Otherwise, you are having my mobile number, WhatsApp number, this number 859596. You can note it down. And if you want to have some updates, so you can just put a ping there. So we can also add it into our WhatsApp group. So you can ask any queries there. So every Saturday we are having like our queries free of cost. So anybody can be, every Saturday we are having on our YouTube channel our queries. So any queries if you are having on real time basis, you can ask, you can write a mail, or you can present also, you can show the file also. And friends, you can visit for many things like get like GST number from PAN, convert amount into words, right? So 26 AS, how to convert those files into a proper tabular format, like how to convert calendar year to financial year. So there are so many things which are available absolutely free of cost on our website, that is Champex. That's all from my side. Thank you very much.
Thank you so much, sir. Thank you so much, sir. Can you hear me, sir?
Yes, absolutely, Anilji. Bilkul.
Sir, there are 2-3 queries for you.
Yes.
One is the very relevant query because bank audits are coming nearby, bank audits, and one member is asking about the concurrent audits. So member is asking how Power Query tool is useful in bank concurrent audits.
It's very useful in bank audits. You know, there is a very huge data, and the format of that data which we get from the banking software, that is like haywire, like माथा पकड़ करके बैठ जाते हैं. और we have only 2 days 3 days for doing the audit. Like टाइम का कंस्टेंट है और डेटा इतना बड़ा, और हमारी उसके अंदर रिस्पॉन्सिबिलिटी which we have for signing, that is very huge. So in that case, if we are going to use this Power Query, just we know that, okay, for this bank, we are going to get the report in this particular manner. So we can use this Power Query. Once we can make the die and the same type of data of the like different branches, just you extract the report, click the button, you are going to get the report in a like very proper format, and based on that you can do the analysis. Very powerful, like in case of bank audit. But for making the die, obviously you have to spend some time. So it's not that, okay, just like getting the data and putting the Excel, it is going to work, because I have showed you how to make the Power like queries.
Yes,
So it
yes,
depends
yes.
on the complexity of the data. But yes, those type of things are very much possible.
So another question is there are similar invoice number? If there are similar invoice number or some other errors, how it will react to it, or through that report, or get any message that errors, especially say
Yes, so
same invoice number, etc.
if you want to have like some type of errors, like in case you are having the values and in numbers like few of the values which are not numbers, that looks like a number, either you convert into number, or if there is a like in case of date and somewhere you have written today, so today is not a date. So obviously, like those type of errors, like you can identify, and either you can remove those rows or you can correct those rows. So those type of things like possible. It's a very powerful tool. I was telling that, okay, like recently I have done only on Power Query 25-hour session, and after that, like whoever attended, so they were saying that, sir, 25 hours is very less. Next time you do for 50 hours, and again we are going to have this session. So that type of power we are having in this Power Query, sir.
The last question: what happens if the source data is altered or changed?
Source data
Would
is
it
going
save
to,
and upload?
yeah, so if like that's the beauty now, if in case your source data is changing, like if you are having a folder and you want that, okay, in folder you are having 4 files and you want that, okay, all the 4 files should be appended after doing the transformation, and in your original file there may be 20 columns but you want only 5 columns, so it will get the 5 columns once your die is ready. Now out of those 10 files, now either you reduce it to 5 files or 50 files, just go there, refresh. You are going to have, because your source has changed, your new data is there, you have done the refresh, you are saying to the Excel, go and get the new data. You are going to get the new data. That's the beauty. That's why we are using this Power Query.
Yes, yes, yes. So it was wonderful deliberation, sir. Very important and powerful. Powerful. It is really a powerful query. We can say that it is a power query, but it is a really very powerful query and good query, sir. So thank you so much, sir, from the core of my heart and on behalf of CMP of ICI for sparing your valuable time and guiding all of us to use this Power Query, this new tool of Excel. Thank you so much, sir. Thank you so much.
Thank you, sir. Thank you once again to the committee of members in practice, and my co-speaker Amit Garg is also there. So please be stay. So definitely the new like this Indus. So that's also going to be have a very wonderful like deliberation. So please like see and wish you all the best. Thank you.
Thank you, sir. Thank you, sir. Thank you, sir. Moving towards our next technical session, that is relating to the overview of Ind AS 110, that is consolidated financial statements. We have with us our own chartered accountant, Sri Amit Garg ji. Once again, welcome Amit Garg ji. So without wasting much more time, our members are eager to hear you on this Ind AS 110 consolidated financial statements. Over to you, Amit ji, please.
Thank you so much, Anil ji. So as Vijay ji has already paved the way, and now the next topic is in consolidation. So you get the how the presentation is to be done, how to prepare the consolidated financial statements. Definitely you have learned the Excel, and in a very less time, how you can best utilize your time and how you can prepare the financial statements and consolidated financial statements. Both topics are very relevant for today's time. So let's move on to overview of Ind AS 110. Anilji, just one confirmation. I hope my screen is visible to you.
Yes, sir. Yes, sir.
Thank
Fully
you so
visible,
much
sir.
for your confirmation.
Perfect.
So now we are going to discuss consolidated financial statements, and we will just understand the bigger aspects of Ind AS, considering the time and the what is specifically different, as currently we have two sets of accounting standards. One set of accounting standard is simple accounting standards, which has been notified by company's accounting standard rules 2006 and which has been amended from time to time, right? That is what we have been using. The Ind AS come into picture, but still that is also applicable because Ind AS is only applicable to the companies which have crossed certain threshold. So both standards are applicable in today's time depending on the threshold. If certain threshold is crossed, certain companies are into Ind AS framework, and the companies which have not met that threshold, they are following the erstwhile accounting standards. So today we are going to cover Ind AS 110, but simultaneously I will throw some light wherever there is difference between AS 21. So that is very, very important to bridge the gap, so that we have been doing the existing standard which is AS 21 since ages, since long time. Now suddenly after 2015-16 just we moved to Ind AS framework. So the difference we also need to understand how and from where we are coming in the Ind AS framework. So let's move on with the aspects which we are going to discuss in today's session. We will discuss introduction to CSF. CSF is consolidated financial statements. When we will also understand certain definitions which is relevant for today's session. There are various definitions, but we will understand 2 or 3 definitions which is relevant. Then we will also understand scope, means the standards is applicable to certain companies, and what kind of companies are not included or is Ind AS 11 is not applicable to those companies. Then we will understand the concepts of control. That's very, very important. That's the crux of today's session, concepts of control. And then we will understand certain accounting treatment which is applicable for consolidated financial statements. Let's move on to Ind AS introduction to CFS. So now in today's world, as we know, people are doing business. Why they are doing business? So companies or the individuals are investing in the companies, right? And the companies who are getting the money in the form of share application money or even in the form of debt also, they either buy their assets in their company itself or they invest, means they expand. Either there may be vertical integration, there may be horizontal integration. So they may invest in other companies also. So in a nutshell, a business is an integrated set of activities and assets that is capable of being conducted and managed for the purpose of providing a return in the form of dividend, lower cost or other economic benefits directly to the investors or other owners and members or the participants. So it is not necessary that in one particular company in which the investors has infused the fund, only that independent companies carrying the operations to meet the objective of the investors. There is a possibility, and in today's complex environment, if the company want to grow, one of the key objective of the business is to grow, and the growth can be organic or inorganic. Inorganic means you're doing acquisition, you are doing restructuring, you are merging your business, you are demerging your business, you are acquiring other companies, maybe even that is related to your business or even that is not related to your business. So you may have a diversified portfolio. So you may have an inorganic growth to meet the objective of the shareholders, right? So when you are acquiring, restructuring, merging, demerging the companies, so the concept of consolidation comes into picture. Right now you are not bringing the assets. So there is a possibility that when you are acquiring or you are doing the restructuring of the business, you are investing in other companies. So investment can be through 2 ways. Either you are acquiring the business, means you are acquiring the assets or liabilities into your company itself. Then that assets and liabilities will sit in your balance sheet itself. So there is no other entity then. However, the other kind of acquisition may be you have acquired the share capital in the other company. It means when you are acquiring this share capital, you may have control over the other entity. So there are various types, means there may be control, there may be a significant influence, there may be a joint venture. So we will focus mainly on the control part, which is very, very critical for understanding the consolidated financial statement. So maybe you have acquired the company through acquisition of share capital in the other company. Then you have to decide whether you have acquired the control or not. Accordingly, you will prepare your consolidated financial statement. So far, now the requirement of preparing the consolidated financial statements is coming from Companies Act 2013 itself. But earlier in 1956, in Companies Act 1956, there was no mandatory requirement to prepare the consolidated financial statements, though for the listed companies, there was regulations from the SEBI side to prepare the consolidated financial statements and publish. So that was very, very limited scope. And if there is a requirement to prepare by any other regulations under erstwhile accounting standards, so basically if you was applying AS 21, so AS 21 itself was not giving the mandatory requirement for consolidation. But if it is required by any regulation, even that was not from the Companies Act, rather from the SEBI, one of the example, if you have to prepare consolidated financial statements, you was required to apply the principles of Accounting Standard 21. But in today's time, the Companies Act 1956 has been replaced by Companies Act 2013, and 2013 Act itself mandates the preparation of consolidated financial statements. Section 129 subsection 3 requires the companies to prepare the consolidated financial statements if they are having any subsidiary, associates or joint venture. In that case, it is mandatory that you have to prepare consolidated financial statements, right? If you are applying that, then Ind AS 110 will come into picture. Even Ind AS 110 talks about preparation of the consolidated financial statement. The standard says if you have any subsidiary, then you have to prepare the consolidated financial statement. Vis-a-vis AS 21 was not giving any mandatory requirement for consolidation. That is one of the gap. But now that gap is not relevant because the requirement is coming from Companies Act itself. Okay. So now if there is a control on the operating and financial policies by the acquirer is termed as subsidiary and the acquirer as a parent. Means if you have acquired the shareholding in certain other companies, means the acquirer who is acquiring the shareholding will be called a parent company or the acquirer, and the company in which you have invested, that is called the acquiree, that is called a subsidiary company, right? So now consolidated financial statements are the financial statements of a group rather than an entity, because now there is no value addition. Means if you are preparing your financial statements, your standalone financial statements, it is not giving any value to the investor. So investor has given the fund to a particular company. Maybe that company has further invested into various companies. So the investor is more keen and is interested on the overall picture of the company where his funds had been invested. So therefore now in today's time, the consolidated financial statements are the primary financial statements, where under previous GAAP means accounting standards, your standalone financial statements were the primary sets of financial statements. Therefore there was requirement under accounting standard framework that when you are preparing the consolidated financial statements, all the disclosures which is given in the standalone financial statement is not required to be carried forward in the consolidated financial statements. Whereas in Ind AS framework, consolidated financial statements are the primary set of accounting financial statements. So all the important disclosure, all relevant disclosures to give a true and fair view on the financial statements is required to be brought into the consolidated financial statements. So now you can gauge the importance of the consolidated financial statements. Now a group in a very simple term comprises of a parent and its subsidiary. So whenever we are saying subsidiary, it means it includes the operations. If you have any associates, so your profit of the associates and joint ventures, their results also in that. So predominantly means if we talk about a group, the group consists of a parent and its subsidiaries, right? So each of the entities are linked to each other with a common thread. So under accounting standard framework. So please mind the word when I am saying accounting standard means accounting standard only, not Ind AS. When I will say Ind AS, it means we are talking about Ind AS framework. Ind AS means Ind AS 110 and AS I am talking about Ind AS 21. So under accounting standard means AS, the common thread was predominantly static and through operation of law, meaning thereby it is very rule based. AS 21 said that if there is any voting power, you are holding equity share of more than 50%, then you will be the holding company. Or you are controlling the majority of the board of directors, then you will be treated as the holding company and you should present your consolidated financial statements as per the principles, as per the accounting principles and disclosure principles which are laid down in AS 21. However, under Ind AS 110, that common thread is very dynamic and involves lot of judgment that hinges on control. So the entire thing means why we are saying it is the dynamic under Ind AS 110, because it involves lot of judgment. It is principle based. It is not a straightforward rule based. There may be, even if you are not holding more than 50% of the share capital of the entity, there is a possibility that you are not holding, you have no control over the entity. So there are various examples, so we will discuss that. And on a other side, even if you are not holding 50%, means you are holding less than 50%, you may end up consolidating the other entity, meaning thereby even if you are holding only 30% of the share capital, there may be a requirement of the consolidation. Vis-a-vis, if you are holding 70% of the shareholding, there may be a scenario that you are not required to consolidate financial statements. But what you have to check whether control is there, despite the fact you are holding 70% share, 70% holding in the subsidiary, and you are not controlling. Like for example, you have entered into a technical know-how arrangement with some third party, and as per the arrangement of that agreement, all the operating and financial decisions will be taken by the third party because they are giving the technical know-how, and your business is very centric to the technical know-how. For example, means if we talk about Netflix, so what is important in the Netflix or Amazon Prime? So content development and digital marketing, very important and very relevant activities for the overall business. So if the control of content development and digital market goes into the hand of the third party by way of a contractual arrangement, despite the fact the shareholders are having 70% shareholding in that company, they are not controlling. So they will not control. Rather, the person who has maybe 5%, 10%, even not having any significant shareholding, they may end up consolidating the business of this entity into their entity. So that's the dynamic things which is there in Ind AS 110. Now the situation and the way business is being carried out has totally changed. Besides holding companies, means in nutshell, holding company means who is holding more than 50% per se, or subsidiaries companies, joint ventures and associates, we now also have structured entities, investment entities, special vehicles. Means suppose if you have entered into a contract with the government in case of service concession arrangement, so you have designed a special vehicle. The purpose of that entity, whatever you have, or the vehicle which you have created, so you will have the land from the government, you will construct it, you will operate it for some particular time. So it may be a separate legal entity, or it may be a separate special purpose vehicle. So now the control you have to see from the consolidation point of view, whether you have to consolidate that special vehicle or the structured entities. So you have to see from the initiation, from the design of that particular special vehicle entity or structured entities. It's not only the shareholding which will decide whether you have a control or not. So control aspect is very, very important. How it will come? There are various ways then that you can get the control of the can get control over the other entity. It may one is definitely one predominant factor is share capital, but there may be other factors like as I discussed the contractual arrangement. By a contractual arrangement, you may have control on the other entity. There may be convertible debentures, convertible preference shares. So once that is converted, you may have the control. Maybe not right now, but that depends on the terms and conditions of the potential voting right. That is called potential voting rights. So that may be converted currently or that may be converted in a future period. So that depends. Means you should be in a position to control currently when you are deciding whether you have to consolidate or not. At that point in time, you have to decide whether you have a control or not. And that control includes the potential voting right, which can be exercised today itself. Okay. So control word is very, very important for the purpose of consolidation of the financial statements. Whereas under erstwhile accounting standards, even accounting standard 21, the decision is very, very straightforward. Share capital and board of directors, who is controlling these two things. Straightforward. But in Ind AS 110, it is very, very tricky. There are various kinds of instruments. You have to evaluate it very, very carefully. So definitely one significant factor is this share capital, but that may be deviated. There may be a rebuttable presumption that despite the fact you are having a significant shareholding, but you are not controlling the entity. So control is very, very important from the perspective of Ind AS 110. Let's understand certain terms, certain definitions which is relevant for Ind AS 110. Consolidated financial statements, very, very common. Financial statements of a group in which the assets, liabilities, equity, income, expenses and cash flows of the parent and its subsidiaries are presented as those of a single economic entity. So from the stakeholders perspective, from the investors perspective, consolidated financial statements is very, very important, and it includes all line by line item consolidation with the subsidiary, and group is parent and subsidiary. This is one set of financial statements which is required to be presented, which is required to be prepared by the company if they have any subsidiary. Second, separate financial statements. So Ind AS 27 deals with separate financial statements. So these are the financial statements presented by a parent. Please write the word, please pay attention on the word parent. Presented by a parent, it means the definition is using the word parent. It means you also have certain, you also have subsidiary or a associate or a joint venture. Okay. So if you have that, then you will prepare a separate financial statement. So financial statements presented by a parent or an investor with joint control of or significant influence over an investee, in which the investments are accounted for at cost or in accordance with Ind AS financial statements, which is 109 recognition and measurement principles. Meaning thereby, if any company is having subsidiary, associates or joint venture, they will prepare two sets of financial statement. One is called a separate financial statement, which is dealt by Ind AS 27, and second set of financial statement will be consolidated financial statement, which is dealt by Ind AS 110. Now there is another term which is individual financial statements. What is this individual financial statement? These are the statements which is prepared by an entity. Now please read the word prepared by an entity, not the parent. In the separate financial statements, there was the word parent. Now here we are saying entity. So prepared by an entity that does not have subsidiary, associates or a joint venture's interest in a joint venture. Meaning thereby it is a single company, does not have any entity, any subsidiary, any associates, any joint venture. That company will prepare individual financial statements. Understand? So basically, if any company has subsidiary, associate, venture, two sets of financial statement. One is consolidated financial statement, other is separate financial statement. And if the entity does not have any of them, that entity will prepare only individual financial statements. Okay. So even for identification, if you see the financial statements, at the heading of the financial statement, it's written standalone financial statement. If company is having subsidiary, associate, so they will write standalone financial statements. It means if they have written standalone, they will be having the consolidated financial statement also. But if nothing is written, it is presumed that means it's not standalone, it's not consolidated. This is the only individual financial statement because the company does not have any subsidiary, associates or joint venture. So let's understand scope. We understand three terms which will be very, very useful. And note applicability scope. This standard does not deal with the accounting requirement for business combinations and effect on consolidation, including goodwill arising on business combination. So if this standard is not applicable, which standard will apply? In that case, it will apply Ind AS 103 business combination, meaning thereby when you are acquiring any business, whether through acquisition of assets, liabilities, or even by acquisition of share capital, then you will apply Ind AS 103 when you will acquire that entity. But post that, when you will have to consolidate every year, you will apply Ind AS 110. But at the acquisition date, you will apply Ind AS 103. Post-employment benefit plans or other long-term employee benefit plans to which Ind AS 19 employee benefit applies. So basically in India, generally all these employee benefit plans are governed by trust, and on trust this Ind AS is not applicable. So generally if you have certain kind of these entities or trust, you will not consolidate that, rather you will apply simply Ind AS 19 if that is applicable to them. An investment entity. What do you mean by investment entity? So an investment entity need not present consolidated financial statements if it is required in accordance with this Ind AS to measure all of its subsidiaries at fair value through profit or loss. Means if there is an entity whose main business objective is to earn capital appreciation and interest income or dividend income, that is the main objective of the entity. So as per Ind AS 109 or 110, that entity is exempted to prepare consolidated financial statements provided that investment entity measures all their investments in subsidiaries at fair value through determines their values of the investment at fair value. In that case, that investment entity is exempted from the preparation of the consolidated financial statement. So I again summarize, means in Ind AS 110, there is exemption to prepare consolidated financial statements for investment entity. And what is the investment entity? That we will see after just one or two slides, just wait. So now, other than investment entity, this was the scope. Now there is certain exception from preparation of the consolidated financial statement, and this exception also comes from the Companies Act. And what is the exception? The parent itself is a wholly owned subsidiary, or it is partly owned subsidiary of another entity, and all of its owners, including those not normally entitled to vote, have been informed about that the entity don't want to present the consolidated financial statement, meaning thereby means you're either a wholly owned subsidiary or a partly owned subsidiary. There is exemption that if the ultimate company is preparing consolidated financial statement, in that case there may be exemption, provided there are four conditions. All the four conditions are fulfilled. First condition, it is wholly owned or it is a partially owned subsidiary of another entity. Second, it's that and equity instruments are not traded in the public markets, means exchange either in India or outside India. Third, it did not file nor is in the process of filing its financial statements with any security exchange, either India or outside India. So neither its debt or equity is listed or in the process of listings. And the last one is its ultimate or intermediate parent produces consolidated financial statements that are available for public use and comply with India. So let me just summarize. Golden rule is that if you have any subsidiary, you have to prepare consolidated financial statements. This is the golden rule. But there is certain exception. What is that exception? This is the first exception, that if you are a holding company or partly owned company, your debt or equity is not traded on any stock exchange, and also you are not in the process of getting it listed on a stock exchange, and above you there is some other parent company, either intermediate or ultimate parent, who is consolidating your financial statements in their books, and that consolidated financial statements are available for public use. If all these four conditions are fulfilled, then you need not to prepare the consolidated financial statements. Let's understand this with an example. Entity X owns the following other entities: 100% interest in entity Y. Entity Y owns 60% interest in entity Z. Then 80% interest in entity M, and entity M owns 60% entity in entity N. And the structure is like, means at the top, ultimate parent is X Limited, which is a listed entity. X is a listed entity only for listed entity that will be available in public domain. That's why I'm saying it is a listed entity, right? Below that there is a Y and M entity. X holds 100% in Y and holds 80% in M. Below that, I further holds 60% in Z, and M holds 60% in. And now the question is whether Y and M is required to prepare the consolidated financial statements or not. Now please remember the previous conditions, and it is given that these Y and M is not listed and is also not in the process of listing its securities on the stock exchange. So in this case, these fulfills the criteria, means it is wholly owned or partly owned. So Y is a wholly owned and M is a partly owned. First condition is fulfilled, and that is not listed nor they are in the process of listing. And the last condition is ultimate or intermediate parent produces consolidated financial statements and are available in the public domain. So X is, as I said, it is a listed company, so their financials will be available in public domain. So in this scenario, Y Limited and M Limited need not to prepare consolidated financial statements. However, because this is a Y Limited, it has informed X Limited that they are not preparing, and X Limited said, okay, you need not to prepare. But in case of M Limited, if they don't want to prepare the consolidated financial statements, M Limited need to inform to all of the shareholders, even if they are non-controlling interest, even they are not controlling the entity, still they have to, this entity M Limited has to inform all the stakeholders, shareholders, and have to take the approval that they are not preparing, and they have consented to that. Means they have allowed, all the shareholders have allowed the M Limited not to prepare the consolidated financial statement. So in case of M Limited, exemption can be taken provided the remaining 20% have also consented that you need not to prepare the consolidated financial statement. So in nutshell, in this scenario, Y Limited and M Limited take the exemption and need not to prepare the consolidated financial statements, and X Limited directly can consolidate Y Limited and Z Limited and M Limited and N Limited, and their X financials is available in the public domain. This is the exemption, which is again coming from the Companies Act. Now another exception. So there are only two exceptions when you need not to prepare consolidated financial statements. In all other cases, you have to prepare consolidated financial statements if you have any subsidiary. First, we have discussed four conditions. Second is the investment entity. What is an investment entity? An investment entity not to consolidate its subsidiary or apply Ind AS 103 when it obtains controls of another entity. Rather, it shall measure an investments in a subsidiary at fair value through P&L in accordance with 109, which we have discussed previously. So this is the second exemption. Unless an investment entity has a subsidiary that provides services that relate to the investment entity's investment activities, it shall consolidate at activity, meaning thereby, suppose X Limited is an investment entity. There is a subsidiary A Limited. There is another subsidiary B Limited. A Limited do the same activity which X Limited is doing. So in this case, X Limited will consolidate A Limited, but suppose B Limited is doing any third other business. In that case, if X Limited is fair valuing the investment in B Limited, in that case B Limited is not required to be consolidated in the books of X Limited. Again, I am summarizing second exemption. Investment entity whose main business is to invest in the subsidiary and only motive is to have the capital appreciation and interest or dividend income for the investors. A parent company of an investment entity means if we have discussed X Limited, suppose there is Y Limited above X Limited, a parent of an investment entity shall consolidate all entities that it controls, including those controlled through an investment entity subsidiary, unless the parent itself is an investment entity. Means in this case, if Y Limited is an investment entity and all its subsidiary means X Limited, and below that, if Y Limited is fair valuing its investments in those companies, then need not to consolidate. But if top company means at the top, ultimate parent company is not an investment company, then that parent company will consolidate the financial statements, will produce the consolidated financial statements in that case. So I am just again summarizing the two exceptions. First exception coming from Companies Act, 4 condition, not listed, wholly owned subsidiary, partly owned subsidiary, and intermediate or ultimate parent company is producing consolidated financial statements. That is first. Second, investment entity. If it is an investment entity, it need not to prepare consolidated financial statement, provided all the investments in subsidiary is being fair valued in terms of as per the provisions of Ind AS 109. So these are the only two exceptions when you need not to prepare consolidated financial statements. In other cases, you have to prepare consolidated financial statements. And what is an investment entity? An investment entity obtains funds from one or more investors for the purpose of providing those investors with management services. Basically, they are obtaining funds from the investors, investing into other equities, debt equity or equity, either other equity, just for the purpose of capital appreciation and investment income, or both. Measures and evaluates the performance of substantially all of its investments on a fair value basis. Because when you are fair valuing the investment, ultimately the essence of consolidation has been taken care. So your individual entity is giving the essence of the group itself, even without consolidating that entity, because you have fair valued. And how the fair value will come? When you will fair value the subsidiary, only that fair valuation you will be able to get for your investment. So ultimately, you are giving the correct picture to the investors. In case of investment entity, when you are fair valuing your investments at fair value as per provisions of Ind AS 109. So these are some of the factors how you will determine that it is an investment entity or not. These are some of the factors, like it has more than one investment, it has more than one investor, it has investors that are not related parties of the entity, it has ownership interest in the form of equity or similar interest. So if these are the conditions, means if you evaluate that your entity is investment entity, you need not to prepare consolidated financial statements. Now, the crux of this standard is concept of control. As we discussed that even if you are having a significant shareholding, means more than 50% shareholding in a company, still there may be a possibility that you are not controlling the interest. You are not controlling that entity. So let's understand how you get the control. An investor controls the investee when the investor is exposed. Please mind the word, each red item is very, very important. When the investor is exposed or has rights to variable returns from its involvement with the investee and has the ability to affect those returns through its power over the investee, means investor is exposed or has the right to variable returns. We will understand what is variable returns and what is power. So power is very, very important. Has the ability to affect those returns through its power over the investee. How the power will come? Power will come from the right. And right, how the right will come? Right will come either through shareholding or through agreements with the company, means they are giving the technical know-how or all the raw materials, everything, and as per the agreement, all the operating policies and financial policies will be decided by that service provider. So that power can come from there also. So an investor must, not optional, it is must assess all facts and circumstances to determine whether it controls an entity. These facts and circumstances should be continuously monitored and reconsidered if need be. Continuously means at each reporting date, you have to see whether you are controlling the entity or not. There is a possibility, means the contract has been terminated or you have sold the equity, then on each reporting date, you have to validate whether you are controlling the entity or not. And accordingly, you will prepare the consolidated financial statements. So power over the investee, exposure means there should be exposure. If you don't have any exposure on the variable returns, then there is no question of control. The ability to use the power, over the investee to affect the amounts of return. So you should have the ability. So these are some of the elements which will give you control. First is equity shareholding. No doubt, if you have more than 50%, by default you are getting. But if you say even despite the fact you are holding more than 50%, you are not controlling the company, you have to demonstrate the reasons, you have to demonstrate the circumstances, why you are saying that even you are holding more than 50% and still you are saying you are not controlling the entity. But yes, it is a rebuttable presumption. So first indicator, first element, equity shareholding. Second is ability to appoint directors to the board, means you are in a position to appoint majority all or majority of the board of directors in the board, then it gives you control. Then de facto control. De facto control means you are already controlling the activities either through contractual arrangements or through other appointment, or there is a common CEO, means your company is having the CEO and that same CEO is also in the another entity and they are taking, that CEO is taking the decisions regarding relevant activities, then there may be de facto control. Then potential voting rights. What do you mean by potential voting right? Potential voting right means you have invested in the convertible debentures of the company. So that is a potential, means that is a convertible debentures and that may be converted in near future. So you have to decide whether that conversion can be done immediately, means when you are evaluating the control, if answer is yes, then you will consider those rights also for determining the control. But this was not the case under Accounting Standard 21. There was only two things, equity shareholding and appointing of directors. There was no consideration of potential voting rights. But in Ind AS 110, very, very important role is played by potential voting rights. But the only thing is that it should be currently exercisable. I mean, if the terms is that after 2 years these can be converted, in that case you cannot say that you are in a that is currently exercisable. So that will be ignored. But if it is convertible anytime at the option of the investor, then you can consider that, provided that you can convert that. Means convert means it is in the money. In the money means it is profitable for you. If it is out of the money means if you convert it, there will be loss to the investor. In that case, it is not exercisable because you will not exercise those options because it will give you loss. So you have to evaluate. Lot of judgment is involved. It's not a straightforward answer. So potential voting rights is the rights which you can get through the conversion options. Then control agreements through agreements you may have. Suppose you have developed a special purpose entity. You have arranged as per the arrangement. You will take the decisions of financial decision. Means what will be the financial structure of the company. How much share capital will be there. How much borrowings will be there. All purchase of goods and services. You are deciding that. So that right may come from the agreement also. So these all are the sub elements which you have to take care while determining the controls, right? So existing rights we have discussed. Existing right, that gives it current ability, means you have the already right, either share capital, you have existing share capital, or potential capital which can be converted into share capital immediately. That is called existing right. And why you need right? You need right to take decisions for the relevant activities. And what are the relevant activities? Relevant activities means selling and purchasing of goods or services, managing financial assets, selecting or acquiring or disposing of assets. So researching and development of new products. These all are the examples of relevant activities. If you have the right to take decision of these relevant activities, so it gives you the power of the control. Example of decisions about relevant activities means establishing, operating and capital decisions of investee, including budgets, appointing and remunerating an investee's key managerial personnel. So if these decisions you are taking regarding the relevant activities, it means you are controlling the entity, and by involving these decisions, your returns is also fluctuating, right? So right, that gives an investor power over an investee. Rights in the form of voting rights, rights to appoint or reassign, removal of the key management personnel. So these are some of the examples which gives you right, which that gives you the right over an investee to decide whether you are controlling the entity or not. And what do you mean by variable returns? So these are examples of variable return. Means interest on the debt securities, dividends, or synergy. Suppose your subsidiary have a very, very specialized knowledge, and if you take the decisions of the relevant activities, means whether those resources will be used by a third party, and you are deciding how that resources will be used. It means your return, your variable return is being fluctuated. Your either in the form of dividend, either in the form of capital appreciation of the share price. So in any way, or maybe the cost synergies may be there. So by your involvement, your returns are fluctuating. So that is called variable return, and you have a power over the investee to control the relevant activities. Link between power and return means control means not just the power over the investee or the exposure or right to variable returns from its involvement, but the ability, means you are into current position to use its power to affect the investor's return from its involvement with the investee. So these are the things, means very, very important is the control part, and how that control will come. That will come from the power, and power, you will be able to exercise the power by your rights, and how the rights is exercised, either that is coming from the share capital, potential voting rights, de facto control, or contractual arrangements, right? So let's understand the last part. Let's assume that now you have the control of the activity, how the accounting is to be done, and from which date is to be consolidated. Suppose if you are considering financial year 1920, from 1st April to 19, the year is starting, but you have acquired in between, for example, 30th September 2019. On that date, you have acquired the shareholding in the company that becomes your subsidiary in between. So before that date, you will apply Ind AS 103. Means at this point when you are acquiring, you will apply Ind AS 103. after this date, till the time you are holding investments in that company and you have control, you will apply Ind AS 110, and under 110, this reserve and surplus, you will consolidate that. And if it is not wholly owned subsidiary, some other parties are there, then you will present NCI, also non-controlling interest, within the equity itself, and after disposal, post that, you are not concerned. Once that your control is lost, still, but if you have some holding, that will be fair valued as per Ind AS 109 principles. Even if you have not sold 100%, some parties with you, if that is less than 50%, you are not controlling the entity, that part will be fair valued as per Ind AS 109, but you will not do consolidation once you dispose the subsidiary. Okay. Accounting requirements means what exactly you have to do under consolidation. Combine like items of assets, liabilities, equity, income, expenses, and cash flow of parent and subsidiaries. Line by line item. All expense plus. Only plus minus, simple. You will combine everything. But there may be the transactions between the entity and the subsidiary, means from the parent, subsidiary, or within the group, that has to be eliminated. So offset, eliminate the carrying amounts of the parent's investments. This is investment, means you are investing in the subsidiary, that has to be eliminated. And all other intra-group transaction, like you have sold your inventory, means parent has sold the inventory to subsidiary, or the subsidiary has sold certain other fixed assets in the to the parent. So all those activity, all those items has to be eliminated in full, because this is a full consolidation. Despite the fact you are not holding 100%. Suppose if you have a 60% shareholding, still you will eliminate the entire unrealized profit in that. We will understand with one example. But most important part is that whenever you are eliminating the transactions, you have to recognize deferred tax on that. This was not the case under AS 21. In accounting standard, we were not recognizing deferred tax on elimination things, but under Ind AS 110, if you are eliminating, if you are doing profit elimination, you have to create deferred tax also on that. Okay. So uniform accounting policy. If there is any change in the accounting policy, for example, for inventory, one company is using FIFO, other company is parent company is using weighted average. So you have to apply weighted average for the subsidiary also, and adjustment is to be taken in the consolidated financial statement accordingly. And what are the major adjustments? So these are the major adjustments in case of a consolidation, that is goodwill, non-controlling interest, and consolidation reserves. And other intercompany adjustments, that is the intercompany balance, means receivable, payable will be eliminated, investment share capital will be eliminated. Unrealized profits means you have sold the inventory, you have sold other non-current assets to the other entity in the group, then unrealized portion on those and items is to be eliminated, like inventory, non-current assets. So let's understand one example how it is to be removed. A parent owns 60% of a subsidiary. The subsidiary sells some inventory to the parent for rupees 35,000 and makes a profit of rupees 15,000 on the sale. The inventory is in the parent's balance sheet at the end of the year, and you have to remove that intra-group transactions and pass the necessary entries. Now, cost to the subsidiary is 20,000 and you have sold at 35,000. It means there is 15,000 rupees which has not been realized because inventory is lying in the books of parent company. So you have to remove that 15,000. How you will remove? You will remove 35,000 because you have to eliminate intra-group transaction. 35,000 has already been recorded in your sales, means in the books of subsidiary, that has been booked as sales. So you will debit revenue and or corresponding side, because cost was only 20,000. So this is also coming in the profit and loss, that account that will be reversed. So 20,000 will be reversed, and correspondingly 15,000 means this is the unrealized portion you have to eliminate. You have to reduce your inventory accordingly. So inventory will be credited by 15,000. This is the general entry which will be made for removing of unrealized profit and intra-group transaction. In addition to this, there will be one more entry that will be for deferred taxes, because in the books of parent company your inventory cost is 35,000, but in your books now inventory is coming at 20,000. So this 15,000, for example, rate of interest means tax rate is 30%. So 30% of this 15,000 will be 4,500. This 4,500 deferred tax asset will be created, because your in tax books there is a 35,000 inventory, but in the books there is only 20,000 inventory. So on this delta of 15,000, your deferred tax will be created, deferred tax asset will be created on this item. Okay, deferred tax asset will be debited and income account will be credited by 4,500, provided rate of tax is 30%. So this is very, very unique, which was not there under accounting standard thing. Now I am done. Just this was the overview of financial consolidated financial statements. So I hope I met your expectations from the limited time. Thank you so much. But if you have any query, you can reach out to me. My email ID is there. My phone number is there. Anytime you can reach out to me for.
Can you hear me, sir?
Thank you, Ji. Yes, yes, sir.
Sir, there are two questions for you.
Yes, yes. Please tell me.
Sir, one member is asking, please give some instances where there is control, but there is no shareholding.
For example, you have set up a special purpose entity, and there is a one party is there. They have the only technology worldwide, and no other party has any that technology. So if they, from the contractual arrangement, that party who is having technical know-how, and they will take all the operation, means what will be the share capital in that company, what will be the ratio of the borrowings, and what will be the structure of the board of directors. So there will be it's not necessary that the company who is having the technical know-how is having share capital in the company. Still that company is controlling the relevant activities. So that may come from the contractual arrangement.
Ji sir, ji sir, ji sir. So thank you, sir. And one more question, sir. Whether reserve and surplus also have to be consolidated line by line? And what about the acquisition reserves?
Other than statutory reserves, nothing is to be consolidated. That will come in the form of goodwill or capital reserve. So reserves, general reserve will not be will be carried forward line by line. Only expense, income, liability, assets.
So no reserves, neither pre-acquisition reserves also.
No. Pre-acquisition reserves will be taken care in the goodwill and capital reserve part.
Goodwill and capital reserve. So sir, thank you so much, sir, for your expert opinion, your expert advice, your knowledge sharing with all the members. I have gained a lot through your deliberation.
Thank you so much.
I have gained a lot through your deliberation. And I hope our members have gained a lot through your deliberation. It was a wonderful experience to have you over here, sir. Thank you so much. On behalf of CMP of ICI, I extend my heartiest thanks once again for sparing your valuable time. Thank you so much. Namaste.
Thank you, sir.